Imagine this. The date is February 26, 2026. Mortgage rates hit 5.98%. That's the first time below 6% since 2022. Buyers had been waiting 4 years for that number, and then it happened. 2 days later, the bombs dropped on my brain. Within 1 week, rates were back above 6%. And by March 12th, Freddie Mac had logged 6.11%. Well, today, March 16th, the Mortgage Bankers Association is reporting 6.26%. That 5.98% window lasted exactly 48 hours. If you blinked, it was gone. Here's what nobody's explaining to you. Mortgage rates don't follow the Fed. They follow the bond market, specifically the 10-year Treasury. When the U.S. and Israel struck Iran on February 28th, oil blew past $100 a barrel and peaked at $119. When oil spikes, inflation expectations spike. When inflation spikes, bond traders demand higher yields, and higher yields mean more mortgage rates. Now here's what the panic crowd won't tell you. Even at 6.26%, you are still 54 basis points lower than this time in 2025. Last year, rates were sitting at 6.65%. Your buying power is up about $30,000 compared to 12 months ago. And purchase applications were up 7.8% last week. Buyers are not waiting for perfect. They are tired of being priced out by their own hesitation. The market is moving with or without you in it. Now listen close. If you're a veteran, VA loans are already priced well below conventional, typically a quarter to a half a point lower than the market rate. So while everyone else is reacting to 6.26, VA buyers throughout the country are working with a different number. That includes zero down, no private mortgage insurance, and the ability for seller concessions that you can use to buy your rate down even further. These tools exist. You just need someone who actually knows how to use them. Find yourself a loan officer who understands the tools and can explain them. Find yourself a real estate agent who can negotiate on your behalf and get you these concessions. So what's your move? Well, the Strait of Hormuz. You can watch that, and if the supply route stays disrupted, then oil's going to stay disrupted and rates are going to stay elevated. Now, if the conflict de-escalates, oil's going to drop, bonds will rally, rates will fall. The strategy is not one of hope. The strategy is you need to get pre-approved, whether it's for a purchase or a refinance. Know your numbers, give your loan officer permission to make the move when the time comes, and be ready to move the second that window opens. Because as we saw, our last opportunity lasted a whole 48 hours. The next one might be even shorter. Hey guys, thank you for watching. I'm Paul Messina, branch manager with Canopy Mortgage, U.S. Army combat veteran. Don't forget, our philosophy here is relationships before transactions. Subscribe to our YouTube channel for more educational content. You can find us on Facebook and Instagram at The Mortgage Vet Paul. Drop me a DM, and don't forget to register for